Hello everybody, my name is Dilhan. I'm from Team 2 and today I'll be talking about America's 10-year treasury yield falls below 0.7%. Firstly, I will be talking about how the yield curve and explaining a few details about it. A yield curve is a line that plots yields of bounty. They have an equal credit equality but holds different maturity dates. The slope of a yield curve gives a good idea of future interest rates and predicts various economic activities. Here, I will be showing how to read a yield curve. There are four kinds of yield curves generally. Firstly, it would be the normal yield curve, which as you can see tends to slope upwards. And this rewards investors for investing in these bonds during the long term. The second one we'll be looking at is the inverted yield curve. This is what investors should be careful in investing in, as there's a high risk in investing in these kinds of yields. Finally, we'll be looking at the humped and the flat yield curves. The flat yield curves, even though they have the same credibility rate, the maturity comes at the same time, so there is not much of a yield. And the humped shows the short-term economic growth. This is a look at the US Treasury as of the 24th of August. And as you can see, during the last 3 months, the yield has been going at 0.094, and a year ago at 0.127, and 2 years ago 0.151. And you can see a recurring pattern that it's slowly increasing. On the 24th of August, as the traders got ready for the last session of the month, they noticed that the treasury yield had dipped down, and they had to keep a key eye on the data jobs by the end of the week. When they benchmarked at the 10-year treasury note, uh, which indeed did move inversely, so at 0.814, it proved to be 0.69%. Sorry, 0.69%. And moving down to the 30-year benchmark bond, it was seen at 1.46%. To put that into perspective, it has jumped by basically more than 0.75 in the last week. As of late, America is finding different ways to cope with COVID. Slowly, as America adjusted to their living lifestyle with the pandemic on their hands, the unemployment rates slowly started falling. Yet, the Federal Reserve Vice Chair Richard Clarida said that they will not raise any of the interest rates, even though the prior week the central bank did announce that it would allow the inflation and employment to run high initially before increasing the interest rates again. In the future, there are a few things that we should look forward to. Um, as the Federal Reserve Vice Chair said that they don't see the negative rates as a practical choice now, and we should keep a keen eye on this. Um, in the past, uh, the yield curve has been able to predict uh, around seven prior economic recessions in advance, and it's very crucial that we should keep a keen eye out for this as well. These are my references. Thank you for listening to my presentation.